Counselor, Embassy of India, Berne, I welcome all of you to this webinar on opportunities in the Indian information technology enabled services sector. The Government of India has undertaken a number of reforms for further increasing the ease of doing business in India, and also for further integrating a self-reliant India with the world. Today's webinar is a step in this direction. India and Switzerland have long-standing dynamic partnership. The MISSP program is being run by the Embassy of India, Berne, with the purpose of further strengthening the existing linkages between the Indian and Swiss business ecosystem. I'm happy to note that in the last 6 months, more than 50 Swiss companies have onboarded on this program. The webinar which we're having today has a number of presenters, which include the knowledge partner of MISSP, T&A Consulting, the legal and tax partner of MISSP, Rotterdam Partner, and guest speakers representing the Electronics and Computer Software Export Promotion Council. Human civilization has progressed to IT-enabled clouds and messengers of today from a time when clouds were regarded as messengers. Before I invite the first speaker, I refer to a poem written by Kalidasa, the greatest Sanskrit poet and dramatist of India, who lived between the 2nd century BC and 5th century AD. The poem is titled Meghduta, meaning cloud messenger. In it, a yaksha who is away from his beloved requests the cloud to become his messenger and carry his message to his beloved. I attempt English rendition of a few lines. O cloud, the provider of relief from heat, carry my message to my beloved, I plead, who lives in Alaka, the yaksha's dwelling place, for anger of God has caused us to separate. So with those words, let me now invite the first speaker of the day, Mr. Tarun Gupta, partner, T&A Consulting, to please come and make his presentation on an overview of the Indian economy amidst the COVID-19 crisis. Mr. Gupta, the screen is all yours.
Thank you, Dr. Singh, and good afternoon, ladies and gentlemen. First of all, a big thanks for taking time out and joining this webinar. We are all in midst of challenging times. As one European leader said, why let a good crisis go waste? So this current pandemic will throw new business models, new business opportunities, new business partnerships. Can India be a preferred business partner for Switzerland? What are the opportunities in India? The challenges? What is changing in India? What has changed in India? The idea over the next 15 minutes would give you a very balanced overview of India and not the Bollywood version. I'm also familiar that during this lockdown era, we've had a deluge of webinars, PowerPoints. I'll try to keep it simple with a message in each slide and hopefully, and not use the cliches like new normal. I would refrain from doing so. So what I have done is, I've divided my presentation into 3 parts. The first part talks about India. Second talks about the opportunity. And third, a quick overview of the reforms. On that, let's begin on the first segment, India. 4 letters best describe India. The 4 Ds of India: democracy, demography, diversity, and disparity. Democracy, proud to be part of the largest democracy in the world. In our last federal election, there were 900 million eligible voters. 600 million people voted, and the results were out in a couple of hours. That shows you our ability to integrate and really scale. Yes, democracy can be chaotic. There are too many constituents. The decision-making can be delayed. Demography, very relevant to today's topic and today's environment, wherein we have the youngest population in the world with median age being 29. I think only 7% of our population is above the age of 60. Over the next few years, we expect to add about nearly the population of Switzerland to our working age every month. The challenge is to create jobs. We will account for nearly 1/5 of the global talent pool, but clearly the policymakers needs to create an environment for so many jobs every month. Third is diversity. You talk about India and diversity, whether languages, whether food habits. India is more diverse than whether you move from northern to southern Europe. We have 22 official languages. So India cannot be viewed as one single unitary market. And finally, disparity. Yes, there is income disparity. Top 1% controls nearly 60% of the country's wealth. Top 10% controls 77% of the country's wealth. There is disparity even in economic development. The most developed and the least developed state, you could have a difference of 10x, whereas in other markets, it could be about 4x. So equitable economic development is also a challenge for our policymakers. If you look at the graph on your right-hand side, it gives you an interesting snapshot that India is the only country which has leapfrogged from agrarian to services. We are proud of our services sector. As our keynote speaker will talk later today. However, our services or our IT sector employs only 1% of our total working population. So what we need to get right also is our manufacturing sector. With that, I move, what's our vision for India? Our vision is to be 5 trillion economy by 2025, of which we want the digital economy to be $1 trillion. Challenging? Very challenging. Ambitious? Extremely ambitious. It took us 60 years to reach 1 trillion, another 7.5 years to reach 2 trillion. And now we are looking to double our GDP in the next 5 years. And currently, with the current environment, yes, it is challenging. We need a real growth rate of 8%. And also, on the whole aspect, on what is required here for this, is we need a virtuous cycle of savings, exports, and investments. And if you look at our foreign direct investments, over the last 70 years, we've got $600 billion of foreign direct investment. 50% of that has come in the last 5 years. Out of that, 90% has been automatic route. What it means is, it gives you an idea how open the Indian economy is. Did not require any government approval. So if you're a foreign company, it is not necessary that you need a local partner. You do not necessarily need to share your intellectual property or your trade secrets. And India has been ranked as the 3rd most preferred greenfield destination. Why is that? Well, if you look at, we have made the most significant improvement in the ease of doing business. We have jumped 79 positions over the last 5 years. We've been consistently ranked in the top 10 performers in ease of doing business. We've all heard of BRICS, but now there's a new term called MIVIT, Malaysia, Indonesia, Vietnam, India, Thailand, as these countries compete to get a piece of the new supply chain realignment. And India fares fairly well amongst these competing geographies. However, one thing unique which India has is domestic market. So with that, I come to the end of the first section of my presentation, where I spoke about India, the 4 Ds, democracy, demography, diversity and disparity, the India vision, and the ease of doing business. The second section talks about India opportunity, and these can be defined in 4 alphabets: CFID, consumption, formalization, infrastructure, and digitization. So what do I mean by consumption? India is a consumption-driven economy. 60% of our GDP comes from consumption. India is the 6th largest consumer market currently in the world, and in 10 years is expected to be the 3rd largest consumer market, where our consumer expenditure is expected to increase by 4 times. A word of caution. Sometimes companies overestimate the size of the Indian middle class. If you look at the top of the pyramid, we are looking at 10 million households between above annual household income of $30,000 plus. Another 15 million households between $15,000 to $30,000 plus. So really, these 35 to 40 million odd households are the consuming class, which is about 200 million people. And it's not 1.4 billion, it's about 200 million, but this is also a significant large population as compared to any other geography in the world. Second is formalization. India has 75 million enterprises, which is nearly 22 times the number of enterprises which US has, although its economy is only 8 times our size. So what is different? Well, out of these 75 million, only 10 million have any kind of tax registration, and only 5 million have any kind of tax and social security registration. So what's the impact of this? Well, the impact is on productivity. If you look at our manufacturing sector, 85% of our manufacturing firms are less than 50 employees. So what we have done, because of various factors, we have created dwarfs where companies, even who are older than a decade, had less than 100 employees. Whereas in the US, it could be 8 times the number of employees in a similar time period. In Mexico, twice. So what we have created is dwarfs rather than what we need is babies, which tend to grow up into adults. The second, we need to improve our tax to GDP ratio. It's about 17%. It's low even compared to other developing countries. South Africa, 27%, China, 22%, Brazil, 34%. And less than 6% of our population pays income taxes. And third element of formalization is sanctity of contract. India is ranked low on enforcement of contract. Because of this bankruptcy code, now there is better debtor discipline. First time in India's history, we have companies being liquidated. So with that, I move to the third alphabet, which is infrastructure. This has always been a problem where our lack of infrastructure or lack of investment in infrastructure caused a lot of inefficiencies. And what we have done is if we have to achieve our 5 trillion goal, we need to double our infrastructure spend run rate from $150 billion annually to $300 billion. How can we do that? Let me give you a couple of examples of our ability of scale and execution. Our total road length is about 6 million kilometers. National highways is about 140,000 kilometers. 30% of that has been built in the last 6 years. In the next 4 to 5 years, we want to build another 60,000 kilometers of national highway. So ladies and gentlemen, we would have doubled our national highway network in 10 years. Railways, we have 68,000 kilometers of tracks. In the last 70 years, we've electrified about 30,000 kilometers. But now we want to achieve 100% electrification in the next 5 years. I can go on. Our power sector, our solar installed capacity has increased by 1,000 times in the last 10 years. And finally, I move on to the final D of India opportunity, which is digitization. It's unique. This is a game changer for India's technology inclusion and financial inclusion. And what is it? We have created an India stack, which is based on presence-less, paperless, cashless, and consent layer. I could go on 15 minutes only on this slide, but here the message is we are looking at a holy trinity, wherein we have 1 billion people on biometrics already done. We have 1 billion mobile phones and 1 billion bank accounts. And why is bank account so critical here? In the last 6 years, we've opened 385 million new bank accounts because it allows us to do welfare schemes directly into the beneficiary. We have transferred over $100 billion in the last 6 years. Also, if you look at our consumer transactions, we have leapfrogged from credit cards directly to our electronic payments through a fantastic system called Unified Payment Interface, wherein our transactions in January were over 1 billion transactions. In fact, one of the largest mobile e-wallet players has 150 million active monthly users. If you look at credit cards in 70 years, we have 50 million credit card users. And why we've been able to do that is because of our growth of mobile users and people accessing internet over mobile, which is about 600 million. In fact, today, we consume the largest level of data per user in the world. Our data consumption per user has increased by 44 times in the last 5 years. So this was CFID. Now, if there's an opportunity, there's a small wrinkle of taxation. Well, we had a huge tax reform where our tax rates have reduced by about 10%. So today we are looking at a tax rate of about 25 odd percent. If you're new manufacturing, it's 17%. More importantly, Indian tax authorities were known for their litigation. So now we are signing advanced pricing agreement to offer predictability. We have signed 300 advanced pricing agreement. And finally, we are also taking care of the indirect taxation. India is one unified market now. We have a goods and service tax. Yes, it's work in progress. But look at the scale. On this platform, we've already uploaded 9 trillion invoices, nearly 9 trillion invoices. It is resulting in efficiency of our logistics. We want to reduce our logistics cost from 14% of the GDP to about 10% of the GDP. It's reduced the transit time of lorry. It is increasing our warehouse size and efficiency from 5,000 square meters to 50,000 square meters. So with that, I come to the end of my second section of the presentation, where I spoke about India opportunity, the 4 alphabets: CFID, consumption, formalization, infrastructure and digitization, and also the change in the tax rates. Moving on to the final section of my presentation, which are the reforms. Here I can talk about the 4 L's. First is laws. In the last 5 years, we've repealed 1,000 laws. We are trying to bring about a system of transparency so that the human intervention is reduced. And also the cost of compliance. And that's a slide which shows you the cost of compliance is also reduced and the time of compliance. The second reform we are talking about is liquidity, very relevant in current scenario, wherein under our new stimulus package, we want to provide liquidity to those businesses which will survive. So we have offered over $40 billion of collateral-free loan to our MSMEs. The third L of the reform is labor. We had a plethora of labor laws at central level, at federal level, or at the state level. But now we are reforming our labor laws. And we, instead of 44 central laws, we are putting into 4 codes. And this brings me to the last L of the reform is the land reforms. Land acquisition in India was non-transparent, expensive, time-consuming. Even for highway acquisition land, it could cost you $100,000 per acre. But now states are competing for online database. Your deemed approval, you can buy land for farmers. This slide gives you an idea of 44 industrial clusters. And we have nearly 2 million square meters of industrial space ready for possession in 8 to 10 weeks. With that, I come to the end of my presentation with a slide which shows you marquee foreign companies with a presence in India. And we would love to see more Swiss names, more Swiss flags here. Thank you for your patience. Over to you, Dr. Singh.
Comprehensive presentation, giving a complete overview of the Indian economy and creating a very well base for our further webinar. So let me move on to our next speaker, who is the guest speaker of today, representing the Electronics and Computer Software Export Promotion Council, Mr. Raman Roy, Chairman and Managing Director, Quattro. Mr. Raman is widely regarded as the pioneer of the BPO industry in India and fondly referred to as the father of the Indian BPO industry. Having served in many leadership positions, he is also an active angel investor with 50 plus personal investment in his startups. Mr. Raman Roy, thank you for joining us. We welcome you and we look forward to a wonderful presentation. Thank you.
Thank you for having me, and good afternoon, folks. I'm assuming all of you are in a time zone where it is afternoon. So what I'll try to do over the next 15 odd minutes is give you a little flavor of what is happening in the IT and ITES or BPM, the business process management segment that there are, and the opportunities. And particularly, I'll try and focus in the opportunities that some of you who are from Switzerland and Germany can focus on and what can happen. So if we look at where we are in terms of the economy, and there's been a lot of talk for the year 2019 where we were, the global economy grew 2.9%, so did the US economy with 2.3%. But interestingly, the tech spend grew by 5.6%. And the global sourcing market grew from 209 to 213 billion dollars. That is what the Everest Group estimated. While as a economy, India economy grew, but what is important is what I've tried to bring out at the bottom of this slide as to the new tech that is coming in and changing business. Terms that we had not heard before. All of us on this call, I'm willing to take a bet, till 3 months ago had not heard of COVID, and Corona was perhaps a beer we all used to have. And in the last 3 months, the world underwent a change. A new term came into being, a new realization came into being. What the bottom of the chart brings out is what is happening on the new technology with artificial intelligence, 3D printing, immersive media, cloud computing, cybersecurity, what is happening. And I will endeavor to give you a little flavor where India is playing in this and what the opportunity is to partner with European firms for mutual benefit. So this slide gives you a size of our tech industry. We are 11 large firms, about 150 odd mid-size, 2,000 plus emerging firms, and 16,500 small-sized firms. The right side of this chart gives you to say how in the last 10 years, from 2009 to 2019, we as an industry have evolved. While our traditional offerings of IT services, business process outsourcing, ER&D, and I'll talk a little more about this. While those offerings are there, they've been added to by the new age offerings. India has become a hub for startups. There are 9,000 plus startups. We are the world's third largest hub. And in these emerging technologies that I spoke of, it is these startups that play a big role to actualize what the possibilities are and what the capabilities are. The GCCs, and I have a slide on that, the global capability centers. And these are the logos of the companies that have dedicated global capability centers in India, what earlier we used to call the global in-house centers. And before that, we used to call the captives. Today, with more than 1,250 global centers for international companies are based in India, which employ more than 1 million people. Of our 190 odd billion dollars revenue for the industry, 21 to 23% share of revenue and employees goes to this segment of GCCs. But what is important is that third bullet to say that 80% plus of cloud analytics mobility, this aspect of digital transformation for all these companies, 80% of that is being done out of India. 60 to 70% of their robotic automation, AI, ML, IoT, cybersecurity is being done from these GCCs in India. 24% of centers set up globally in 2019 are in India. The question is, are you, the 30 odd people who are attending this webinar, is your company in India and are you leveraging the capabilities? And I will try and bring out what those capabilities are. India is the largest source of digitization for the world. We grew that. The direct employees of our industry, we presently employ 4.36 million people directly. And that has a component of 884,000 digitally skilled employees. But what is important to note is while this number of 4.36 million grew from 4.16 million, a growth of 4.9% over the previous year, our digitally skilled employees grew by 34%. We have a robust academia that creates the capabilities for the industry. We have a multimodal way of learning. We are creating a ecosystem. And more importantly, the 34% jump that happened is because there are reskilling initiatives within the industry of upgrading the skills of our workforce to cater to what is required. So the next 3-4 slides, I'll give you a quick flavor. It will give you a flavor of where we are. From 177 billion, we grew to 191 billion, a growth of 7.7%. Our exports, on the other hand, grew 8.1%. So, so the growth of exports was larger than the growth that we as an industry faced. And out of that, if you look at it, the software products and ER&D, engineering, research and development, grew about double-digit figures as a percentage, and that for the German and the Swiss component of the industry, I think creates an opportunity, and I've tried to write up a couple of slides on that. The IT services grew by, this is the largest segment of comprising of 42 odd% of our total revenue. We achieved scale with growing number of firms greater than $100 million revenue. We set up more security operations and COEs in 2019. Again, I will not take you through the details, but this gives you a flavor of where we talk of IT and the automatic reaction is only software. That really forms only 42% of what we represent as the industry. The business process outsourcing grew at about 8.2%. There's a huge focus on this in the last 12 to 18 months on automation, on analytics, on cloud, and in packaged products as a service and as a capability. Engineering, research and development, and I'll spend a few seconds extra on this particular slide. The digital engineering, the focus on personalization, the bringing on AR, VR, the artificial intelligence, the verticalized solution for different segments of automotive, industrial, healthcare, the platformization and cloudification, both aspects to take it to the cloud and take it to the platform, that dramatically brought down the cost for what our customers face on a per transaction basis, played a big role. Basically, greater automation of manual testing, product design, development, and technical documentation. And this is the point I want to dwell on. This is the point that the industry within Germany, within Europe, does a lot of. It does a lot of manual testing, product design, development, and technical documentation. And we brought in greater automation to that. This segment grew double digits, 11%, 19 to 20. And post-COVID, we think that this will create another base for growth to the next level. Software products, largely domestic, as you would see. The domestic part of the market grew 9.9%, but our international exports of the products that we created within India grew 9%. I wanted to bring in a slide of the IPR that is created, the number of patents that are filed that originated out of the global capability centers that are created out of India, which have created the products, but given the time, I couldn't get all the data together on that. So, what is our value proposition and what are the opportunities of the ITES structure? We basically bring to the party scale. We are 18,000 plus firms. Uh, we have presence in 80 plus countries. 26 to 28% of our revenues are digital. We have skills. 884,000 I spoke about earlier. There are 1.6 million annual software and tech graduates that we bring to the party. This 6,500 patents, I wanted a breakup of that. This is the number of patents that have been filed by Indian companies for the work that is done out of India. 1250 global competency centers I spoke about earlier. There are 900 plus engineering research and development centers within the global competency centers doing pure engineering research and development that is set out of India today. So what is the theme that the Germanic and the French companies can look at? I took a bash at putting my understanding on a couple of pages to give you the feeling. It is my belief that Germanic and French companies can add billions of euros to their revenue by adopting the digital transformation from where they are today across multiple industries, whether they are in automotive, aviation, energy, financial services, construction, or logistics, to take it to a digital world, to bring in some of the best practices that have been used by other companies. It is our estimate that digital transformation of French businesses will unlock revenue gains of up to 40%, while the companies that do not become digitally integrated could lose up to 20% of their revenue to competitors. And quite honestly, in your markets, having the skill set to be able to accomplish it in the timelines is very challenging. And I've tried to bring out data in this slide to give you a little flavor of it. As of today, as per the various statistics that we have, there are 82,000 vacancies for IT specialists in Germany. This is an increase of 49% over the previous years. Last year, the vacancies were 55,000 jobs. 8 out of 10 companies that we surveyed claim that there is a shortage of IT specialists. 6 out of 10 expect the skill shortage to worsen into the future. France, on the other hand, expects a shortage of 80,000 workers in IT and electronic jobs by this year, and 1/3 of the manufacturing companies are operating at full capacity, while 40% report difficulties in recruiting skilled engineers. Basically, there is a skill gap of which way we do business today, and that skill gap will only broaden as we take to digital transformation and adopt that and change from the old economy to the new economy. It is my belief that the region needs to partner to bridge these gaps, and India affords a great opportunity for us to be able to do it. So I tried to pull this slide together to bring out what could happen. What is a smart partnership look like? Precision manufacturing from Germany, software for India, combined together to create the IoT for tomorrow. And on the bedrock of that is the Industry 4.0, the IoT AI capability, the engineering research and development capability that we weave together for mutual benefit. The companies within Europe benefit, and of course, the Indian industry benefits. My last slide really to bring out that as NASSCOM is the body that represents all of the industry. I've had the privilege of chairing NASSCOM, and I continue to be the member of the executive committee of NASSCOM that runs this body. It is our objective to increase the engineering research and development exports from Germany, France, and Japan. increase investments from Germanic and French companies into India by setting up global competency centers that I spoke about, build brands in India in these brand India in these markets so that more and more companies can look at leveraging that. Thank you very much. Happy to answer any questions. I realize I've overrun my time by a minute. Back to you, Dr. Singh.
Roy, for such a rich presentation, and clearly defining the strengths of the Indian IT sector and the opportunities that lie for Swiss or European companies to collaborate with the Indian sector. Thank you. We will come back to you during the question answer session.
Thank you.
Let me now move on. Thank you. Let me now move on to the next section of this webinar, which deals with the legal and tax aspects. The presenters are from Rodel Partner, the legal and tax partner of MISSP. I'll first invite Mr. Sushant Mehta, a senior associate, to make his presentation, followed by Ms. Ritika Arora, senior associate. Mr. Mehta, please take over.
Good afternoon to all the participants. Thank you for joining in. I'll just quickly move my slides. I'm here to share with you insights in the following areas, namely, first, generally accepted accounting principles in India, which is Indian GAAP. Second, basic compliances for a company incorporated in India and undertaking business operations in India. Audits in India required under different regulations. Starting off with the first, Indian GAAP accounting standards. In India, accounting standards were initially set up by the Accounting Standard Board, which is a body of ICAI, Institute of Chartered Accountants of India, which is a premier body in regulating the profession of accountancy. These standards were adopted by the Ministry of Corporate Affairs in 2006, which is the government body, making the standards mandatory for the purpose of preparation of financial statements and reporting purposes. As on date, there are 31 mandatory AS, which is applicable to the size of the company. So some standards are applicable in whole, and while some disclosures are required and applicable only to specific companies. These AS defines the Indian GAAP, generally accepted principles in India, similar to the way accounting standards issued by the Swiss Foundation for Accounting and Reporting, which define the Swiss GAAP. However, the financial statement prepared using the AS were not in line with the international financial reporting standards. On account of the increasing MNC presence in India, a need was felt for introduction of standards which are comparable with international reporting standards, so that investors are able to assess and compare the earnings of Indian companies with other global companies. Accordingly, Ind AS were introduced. The point to be noted here is that India did not adopt the entire IFRS, but adopted a converged version of IFRS. There are certain carve-ins and carve-outs which differentiate the Indian Ind AS as compared to the IFRS. These Ind AS were notified by the ministry in 2015 and has been made applicable in a phased manner from 1st April 2016 onwards. As on date, there are 41 Ind AS notified by the Ministry of Corporate Affairs. The point to be noted here that a company which is incorporated in India is required to publish its financial statement as per the Indian GAAP, be it AS or Ind AS. So it means that even if a company is preparing financial statement under IFRS, it is still required to publish each financial year, which is financial year for reference is April starting of a year to the March of a next year. They have to publish financial statements under Indian GAAP or Ind AS. So even if they're preparing in IFRS, then however, they still have to make the financial statement under Indian GAAP as well. Moving on to the next slide, compliances. In this slide, we will be discussing basic compliances which are applicable to companies which are undertaking business operations in India. Accounting standards, we have already discussed in previous slide. Second, company secretarial. This requires compliances to be undertaken as per company law in India, which requires regular filings with government body and statutory documentation maintenance like meeting of shareholders and board of directors of the company. are required to be held and documented in a company book. Statutory registrations have to be obtained and returns have to be filed with government body on a regular basis. Direct taxes. This refers to taxation which is there on the income profits of the person who pays it rather than on goods and service. It is governed by the Income Tax Act of India. It broadly requires compliance in respect of tax deducted at source, which is withholding tax, advance tax, and transfer pricing regulations. It requires submission of data in a timely manner. Some compliance is required to be undertaken monthly, some quarterly, and some on annual basis. Indirect taxation. This refers to taxation which is levied on goods and services rather than on income and profits of a person. GST was introduced in 2017 to replace the existing multiple taxes levied by central and state government in India. It broadly requires return filing on a monthly, quarterly basis, basis the threshold defined, which is revenue of the company. Also, annual filings have been introduced along with annual audits. As mentioned earlier as well, it is a new law and is evolving regularly, and accordingly, compliances are also changing. The second indirect tax would be custom law, applicable in case goods are imported into and exported from India and require compliances accordingly. Audits we will discuss in subsequent slide in detail. Labor laws. Labor laws in India broadly encapsulates a lot of laws under it, catering to the requirement of employee like job security, health and safety, minimum wages, pensions and insurance, right representations, and more. The compliances can vary monthly, quarterly, and annual reporting basis the size and operations of the company and including the number of the employees engaged. Coming on to the next slide, audits. This slide highlights the various audits required to be undertaken as per the applicable regulations. Statutory audit. It is, as mentioned in my slide first, that any company is required to prepare financial statements under local GAAP, get it audited from an auditor, and publish it each financial year, irrespective of the size of operations of the company. So it is mandatory for all companies, which is not the case generally. Tax audit. It is audit of tax returns to verify that the income and deductions are accurate and not reporting is accurate. It is not a mandatory audit. It is applicable in case gross receipts or turnover exceeds INR 10 million. Also, while Finance Act 2020, the threshold is increased to INR 50 million if cash payments or cash receipts is less than 5% of total payments or receipts. Transfer pricing audit. Transfer pricing audit. Applicable when an enterprise is engaged in any of the international transactions and certain specified domestic transactions with an associate enterprise. It is also not mandatory accordingly. Goods and service tax audit. The objective of GST audit is to report whether the registered person has done correct declarations and complied with the GST law appropriately. It is also not mandatory and is applicable when annual turnover exceeds INR 50 million. Cost audit, it refers to audit of cost records required to be maintained only in case of applicability. The thresholds are mentioned therein. It is also not a mandatory audit. And the last audit category would be HB2 audit. It is not an audit required by any regulation. On account, we have seen it in practical experiences that on account of change in the financial year or a period of reporting which is different from the financial year reporting, the companies or the groups require its subsidiary companies in India to report numbers which are audited. Accordingly, HB2 audit is generally undertaken. Needless to mention that all audits are undertaken by independent professionals who are governed by various regulatory bodies for work undertaken by them. With this, I come to end of our presentation. We have tried to briefly touch upon vast topics and give high-level highlights for introduction purposes. We would be happy to take up questions and connect and discuss further on specific case basis. I'll hand over to my colleague, Ritika.
Thank you, Sushant. A warm welcome to all of you. So we had some wonderful insights from the industry experts on the ITES sector. With this now, I would like to walk you through some of the legal updates in this area, what needs to be borne in mind when you're looking at entry options in India. The slide that we have in front of us here talks about several investment opportunities that are available under the permissible foreign exchange laws of India. The first subset being the presence of a foreign entity in the form of either a LISA office, a project office, a branch office, or having an incorporated entity set up in the form of a wholly owned subsidiary or a joint venture. Now, the form of entry option that one opts for will, of course, weigh in the business model that you have in mind and factors such as if you're looking to partner with an Indian national or an Indian entity, then there are options of, for example, the joint venture availability that we have. But in practice, what we see is that the private limited company in the form of a wholly owned subsidiary is one of the most commonly opted for models in businesses of such nature. Now, another factor that needs to be kept in mind is the recent changes rather, in the foreign direct investment policy of India, as per which if there is any investment that is being made either directly or indirectly through a country which shares a border with India, then irrespective of the sector that you're looking to invest in, there is a requirement for government approval here. In the next slide, I'll walk you through the requirements otherwise in the foreign exchange laws, but this is critical. This needs to be kept in mind when entry into India is being planned. Now, in this slide, we try to take up some critical issues, some critical laws that needs to be kept in mind when you're looking at entering into the Indian market. Setting up, of course, we've seen it, we've heard it from the other esteemed panelists as well, that we now are moving towards digitalization, uniform simplification, and the rapid jump that we are seeing in the Indian economy is also largely attributable to easing of the laws that has happened rampantly. For example, setting up in India now is centralized. There is a digital process. We have a fast track incorporation route where we are seeing companies being incorporated, of course, subject to all documents being in place. We are seeing entities getting an incorporation certificate in 2 to 3 working days. Your tax registrations can happen in parallel at the same time as your incorporation process. So these are some ease of business measures that have been introduced and are quite beneficial. Coming to some sector-specific updates, 100% FDI under the automatic route in software, IT industry, or data processing industry is allowed. However, please be mindful of the update that I just referred to about an investment being routed through a neighboring country. Now, activities of business process outsourcing require special licenses from the Department of Telecommunication, and this is another thing that is critical and needs to be analyzed and work started well in advance. The laws that govern ITES enabled industries in India also are largely the Information Technology Act 2000, read with the relevant rules here. And talking about data, of course, as we're all aware, is one of the key assets of any organization. India, of course, is mindful of that, and so we have the data protection rules, which of course it was realized are not at par with the global standards, which is why now, and very soon this is going to come in the form of a legislation, we have a new data protection policy in place, which is modeled around the GDPR laws. In fact, it is far more stringent than the GDPR laws. So we are seeing some rapid developments in a positive way in this sphere as well. Now, talking about law enforcement, recognition of foreign judgments in India can be done only subject to filing of execution proceedings or civil suits. Therefore, when you're drafting your contracts, it is very important to be mindful and wisely choose your choice of law and place of jurisdiction. India has a very modern arbitration law and modern arbitration institutions available as well, at par with the global standards, and we have transparent and comprehensible judgments and legal precedents. Talking about insolvency and bankruptcy laws, this has already been touched upon, so I would not like to I would not like to go very deep into this. However, this is something that's constantly evolving, and there are further developments coming in. Labor laws, of course, India is the land of labor. With that comes additional labor laws. However, it is realized that for ease simplification of doing business, these laws need to be combined, and uniform laws in the form of these four codes, which was again touched upon previously as well, is already underway and is expected to be implemented very soon. We also are moving towards digitalization, ease of compliance, and moving from the from the erstwhile physical form of maintaining records to everything being moved to a digital portal, which keeps in sync with the spirit of the ITES industry. So with this overview, we would now like to conclude our presentation from Legal, Tax and Regulatory Update. Over to you, Dr. Singh. Thank you.
Which is the question and answer session. Let me begin with the posing questions that have been received for our guest speaker, Mr. Roy. Mr. Roy, if we can have you on the screen. The first question that has been posed is, how do you see the challenge of reskilling the workforce in the ITES sector?
Yeah, I tried to briefly touch on that during my session. See, we have 4.5 odd million people. And while we are adding about 200,000-300,000 people from outside, because there are also people who leave the industry and go out, the 886,000 that we added was largely reskilled. So what we have done is we've created capabilities at a company level and at an industry level for the workforce to reskill. NASSCOM took the Future of Skills program, which was very kindly inaugurated by the Prime Minister, where we've taken competencies that are required for multiple skills to be future ready by our workforce. And we've created competencies that are available again at a company level, at an industry level. And we are working with the Ministry of Mighty to take that to the consumers, so that people, particularly post-COVID, people who have time on their hands can reskill themselves. It is challenging because not everybody makes it. And that is one of the biggest learnings. A lot of reports come in of somebody not being able to make it. We try once, twice, thrice, 4 times, 5 times, 6 times. But after that, if somebody is not going to be able to imbibe that skills, we have no option but to let that person go, because the job of his or her older skills does not exist. And that is what creates the capability. All I can say is it is a two-way process. While the industry brings in the platform for you to be able to learn, the employee has a role to play to participate in that and to be able to absorb it. I can't hear you. You're on mute.
So dual education system, and a number of Swiss companies also have set up their such sort of apprenticeship centers in India. Let me now come to the next question, which has been posed to you. How are the industry academia linkages in India for the new emerging technology areas?
This is, in my opinion, one of our biggest needs and a big challenge. I mean, how do you expect a kid who's studying in a college or a university where the professor does not understand what is required for AI or analytics or data or 3D or blockchain, where the professor doesn't understand that, how can that professor teach that to the students? So this cooperation within the academia, it's not only the cooperation where you talk of creating course content, but it is upgrading of the capabilities. So, with the National Skill Development Council, NASSCOM has set up a IT unit where we are working with colleges, upskilling not only the students but also upskilling the professors, where they bring in that capabilities and arming them with the skills of what is required to create a student of tomorrow.
Thank you. Thank you, Mr. Roy. Let me pose you one final question to you, which very much refers to the situation today. It asks, as manufacturing firms increase their geographical diversity to de-risk their supply chain from one particular country, do you see a similar problem of delinking for India in the ITES sector?
See, creating redundancies for your critical activities, whether it is geographic redundancy, whether it is a server-based redundancy, is a critical part of defining the way forward on for the industry. Today, the Indian industry has tremendous skills of helping their customers create the BCP plans, to within the plan to say where the diversity is required and how to implement that diversity. And if that diversity is a dormant diversity, like in some cases, you just copy the data of your servers to another location, but you never use those servers. That is not real time, but it is dormant. It is done in a batch mode, as against some real time capabilities where you keep the data separate, where you keep staff separate. And the Indian industry has participated, particularly in Europe, because of language skills, creating a duplicate center within the European countries to be able to fulfill the needs of our customers.
Thank you. Thank you, Mr. Roy. Thank you so much for being with us for this webinar. Thank you for responding to the question answers received from the audience. I'll now move on to the next presenter for responding to a question. Mr. Tarun Gupta, there's a question which says that a number of reforms have been announced by Government of India. When do we see the fruits of these reforms? I mean, I think it's a very generic question based on your presentation. So sometimes we are receiving these generic questions during
I
our
think
webinars.
all businesses are rightly so impatient, and I think that's the nature of being in business. I will take this question in a couple of parts. Historically, India has always reformed whenever there's a crisis. Okay, it's always, and we see that now as well, where the world is going through a crisis, we are also going through a challenging time. We have taken a host of reforms. That's number one. Number two, reforms has been on a one-way street in India. We've been going through a reform. It's a continuous process. Of course, it has stalled sometimes one step forward or back. Yeah. But we are already seeing the benefits of these reforms. And the numbers on foreign direct investment are testimony to that. But for me personally, the reforms have two audience. One is the domestic enterprises. Let's not forget that. We also need domestic enterprises to invest. And second are towards the foreign companies. I think the message is very clear that couple of pain points, be it infrastructure, labor and land, these were the key pain points for a foreign investor, and tax uncertainty. So the government is addressing that, has addressed it, and we already see some of the announcements where companies look to diversify their supply chain, and India playing a role in that. Dr. Singh, you're on mute.
Speaker, we are short of time. So let me move on to Ritika. Ritika, it's a follow-up question from a previous webinar we had on the IT sector regarding incentives for NRIs. Maybe you would like to speak something on the incentives available for NRIs. Yeah.
Yes, so this is related to, I believe, the MSME question and the incentives that are available. So, as was indicated in the previous session as well, now there are some revisions over here in terms of the threshold and investment limits. Of course, and subject to you being recognized as an MSME, you have several tax benefits firstly. Then also in terms of collateral-free borrowings, you have some interest rate exemptions, and there is also protection against late payments. And of course, we would be happy to share our presentations and our papers that we've published in this respect. We'd be happy to do that from our end.
Thank you. Thank you, Ritika. There's one more question relating to the government of, it says that does the government of India have some work already that they can offload to startups that will be set up in India? It's again, in continuation. So if you could just respond to that.
Right. So startups in India, of course, there are several laws that needs to be looked into. There's a startup policy that says that an entity which is incorporated in India, there is a threshold limit of turnover to be qualified as a startup, and most importantly, the startup has to show that it is into innovation or some sort of improvisation of an existing product. So to qualify as a particular startup, there are certain parameters that need to be met. We are, of course, assisting a lot of our clients and applications in this front, and we would be happy to discuss these prospects further as well.
Okay, thank you, Ritika.
Yeah, Dr. Singh.
Yes, I would have invited you, Mr. Roy.
Recently, the government of India came up with the option of saying that up to, I think the figure is 200 crore Indian rupees. They would not be a global tender, it would be a local tender, and startups can participate in that. I'm a investor in a lot of startups. I have 50, 60 plus investments in startup, and I can tell you some 20% of my companies are very, very excited at that potential of what they can do.
Thank you, Mr. Roy. There's one more question. Maybe you can answer that. It inquires, what are the requirements for setting up a GCC in India?
So Ritika or others, they spoke about what it takes to set up a company in India with the requisite approvals. You set up a unit in India and recruit people, and good luck. That is all it takes.
Thank you, Mr. Roy. Mr. Mehta, would you like to add something to this question? What are the requirements for setting up a GCC in India from the legal side? Mr. Sushant Mehta, can you hear me? Or Ritika, if you would like to add something from the legal side? Okay, for some reason, I think I can't get them. So with that, we have come to the conclusion of this webinar. All the presentations that we have shown today would be available on our website. The webinar would be converted into a podcast and we'll be releasing it. We hope that we've been able to reiterate the idea of the strong complementarities existing between Indian and Swiss business ecosystems. I again thank all the presenters who presented today, and to the guest speaker, Mr. Roy, for being with us in spite of his hectic schedule. We look forward to having a number of companies who joined us today as MISSP members. Thank you. With those words, let me close this webinar. Thank you, sir.